Welcome back for another edition of PatternCast Market Talk. And today we're going to talk about crude oil, black gold, Texas tea.
Black gold, Texas tea. I think you have to be older than about 40 to know what that's a reference to.
And then one day he was shooting at some food, and up through the ground come a bubbling crude oil, that is, black gold, Texas tea.
It was made popular by an old TV show called The Beverly Hillbillies when Jed shot it up and then became an instant millionaire. He was shooting for some varmint out in the hills of Tennessee, I believe it was, and he hit an oil reserve and it gushed up. And then in the theme song of Beverly Hillbillies, they talked about black gold Texas tea. And I'm sure that that's where the vast majority of people first heard about it. But it was, in fact, a colloquial term used in the industry.
I'm reading an article here at Market Watch, which says that the reason why oil prices are rising, according to this article, it's that the Organization of the Petroleum Exporting Countries, OPEC,
yes,
will decide to extend its production cut agreement following a committee meeting over the weekend between members and non-members of the oil producer group. Worries about a slowdown in energy demand, however, continue to weigh on the market. So I guess that's the fears that the Green New Deal will do something. But
okay, so OPEC is going to cut
right.
production, theoretically cutting supply,
yes,
raising prices. They're fearful that the lack of consumption of the product is going to create greater supplies and bring the supply down. But of course, Trump is going to counter that by ordering more oil be created. He's going to buy more oil to fill and cap off our strategic reserves because he believes that is a tax on the people.
If you look at the day oil prices in the last 6 months or 7 months hit their low, that was last December, the week of December 24th, Christmas of 2018. An article appeared on the 3rd of January of this year. OPEC oil output posts biggest drop since 2017.
Yes.
So the story about OPEC dropping their oil production was a story which was happening. And let me read you the first paragraph. OPEC oil supply fell in December by the largest amount in almost 2 years. A Reuters survey found as top exporter Saudi Arabia made an early start to a supply limiting accord while Iran and Libya posted involuntary declines. The 15-member organization of OPEC pumped 32.68 million barrels per day last month, and that was down 460,000 barrels per day from November, and the largest month-on-month drop since January of 2017. The survey suggests Saudi Arabia and some of its allies acted unilaterally to bolster the market as crude prices slid on the possibility of a new glut. So here's what I want to point out to you. While they were cutting production from November to, in fact, from before that, but prices slid in 1 month from November the 1st, we'll call it at $65 a barrel, down to the end of December at $42 a barrel, while they were cutting production.
Yes.
This is the conundrum that you've got if you're going to be buying oil based on the oil cut.
No. That's because most people aren't really listening, and I've made this point again, that we in the meantime the United States has become the #1 producer of oil. We are completely energy independent, and we are working overtime to top off those strategic reserves.
What I'm saying is if you're going to buy oil now on the cutting oil story, they already cut oil, and I suspect if we were to look at the oil reports for January and February, March, and April, you'd see, they've been cutting oil production for months now. Mm-hmm. And what they're saying now is they're going to continue with those cuts, but how much is that going to affect the price of oil? Oil from low to high made a move up of over 50%, like 60% or so. So if are you buying that story now? I mean, is that why you're going long oil? What reason, if you're going to look at oil cuts, because the news is baked in.
Yeah.
Story's already happened.
Well, so, I think that OPEC is becoming less and less relevant as we keep on ramping up our production. Trust me, this is an all-out war. It's an oil war. We're slinging sludge back and.
If that's the case, then the way you smoke out your competition is not by prices going higher and higher. The way you smoke out your competition is if your reserves are nice and high and you don't need to get oil from them, they're forced in a position where they've got to drop their prices.
Well, actually, it's a little bit more complex than that, because the oil that we produce and the oil that the Saudis and OPEC produce are two different grades of oil used for different purposes and refined by different places, although we are starting to kind of retrofit our refineries a little bit to balance that off. So there's a little bit of that going on. In essence, we're trying to seize control of oil production so that we are no longer dependent upon their whim. Because it used to be that OPEC, if they made any kind of announcement like that, they would have a dramatic effect on price, and then they could essentially control the entire market. But they're losing control. Not only are they losing control now, but they're cutting production, which means that they're going to get less revenue in, and they're not being successful at pushing the price up. So they're going to try, but at some point it's going to break them. And they don't want to go back to where it was before, back in the $40, $45 range, because that is just skating right over where they are losing money.
If this is the paradigm that we're living in right now, then why is the media, like I'm looking at a Guardian article right now, and of course maybe the Guardian, maybe the source is the problem, but the Guardian article argues that with oil prices more than $70, that can't be crude. That must be some other
Brent. That's Brent.
That's Brent. Okay. Trump will be
a little bit more than crude.
It'll be in a less celebratory mood as OPEC's oil ministers and their allies gather in Jeddah on Friday without Iran. It says that the main agenda item will be the implications for oil of three interconnected American foreign policy crises: Venezuela, Iran, and Libya. These, being played out simultaneously, have the potential to scrub as much as 3.5 million barrels of oil per day from the markets. Okay, but my question is that if we already have our reserves where we're the number one producer, if we are now good on oil, then why do we care about that? And is that not why wouldn't that be a non-issue for the price of oil?
They're trying to upset our independence. I mean, if you look at our reserves today, or as they were reported last week, they reported every Wednesday, we stand at a level that's still almost 10% above the average of our reserves year in, year out.
Why then, if we have so much in reserve, is there any pressure on prices? Why wouldn't these countries be forced to lower their prices?
Well, they are. They are trying. Well, they're not lowering their prices. They're trying to cut production to try to keep the price up.
That being the case, then, how would you play that? I would think that you'd want to steer clear of oil. You'd want to...
Yeah, I think you follow the political story. It's really that simple.
Hey, the guys will be right back with the show. But first, smash that like button and don't forget to subscribe and leave a comment. Bye.
You know, I've been following it in the market, and I've been watching the analysts, and they're trying to analyze it the way they always do, with how many rigs that are out there and what the relative demand is and how much we're trying to keep up with that demand. But Trump is just gets the pedal to the metal. Just keep on pumping. Just keep on pumping. That's one of his gold pillars of his presidency, that we are completely oil independent. That's as big as him saying that black unemployment is lower than ever. Hispanic unemployment is low as ever. Oil is being kept low.
Well, I'm going to go out on a limb, and I'm going to say that if these oil-producing nations think the answer is to keep their production levels low, I don't think that's the answer, because if we already have a lot in reserve and we're continuing to add to those reserves at, by the way, whatever price they're selling, it seems to me that the onus is on them to lower their prices, and if they don't, we'll just keep the pressure up, and that doesn't tell me that's a big long-term or at least medium-term bullish case for oil. So I would be looking to buy oil lower or short it higher than we are right now.
I think that's a reasonable move. Like I said, this is nothing to do. This is outside of normal market forces, which still come into play and everything. But this is, as far as I can tell. I mean, and I've been trying to follow this very closely, and I listened to what Trump's been saying and what the energy secretary has been saying, and the policies that they're pushing forward. And it becomes very apparent that he is using this as a political weapon to put tremendous pressure. And not only does it put pressure on the Saudis, of which the left thinks that he's in cahoots with, as well as the Russians. And the Russians, they're part of OPEC, right? Putting pressure on the Russians as well by producing oil. And on top of that, China is also having their political will and their economic prowess kind of their backs are kind of pinned to the wall with this as well. This is all politics, in my view.
A lot of times we talk about stories, and I like to admit when I don't know whether it moves up or it moves down. In this case, I can see that maybe OPEC continues cutting production production. That raises prices. I can see where the U.S. has enough reserves it doesn't matter. And who knows what Trump does with tariffs and all sorts of stuff with China that might affect things. Who knows what the news story is going to be. So this is one of those deals where I don't have a real strong conviction one way or the other. But I will tell you that PatternCast has, since the service began, made 14 specific signals on oil that triggered. And of those 14, 10 of them outright hit or exceeded our targets. And the average of all of these signals were 180% of the target.
Wow.
So I don't know what the wacky, fantastic story will be. I don't have my mind wrapped around that. I know this. If we get a PatternCast signal, I'm buying it or selling it based on that, because PatternCast has been ridiculously fantastic on oil. When you look at inside these PatternCast numbers, the worst move a PatternCast signal made was a buy on oil at 55 and change, and it moved up 37 cents. Now that's not spectacular. I mean, that's on one contract, $370. But then the moves were 81 cents, 90 cents, 81, 84, 65 cents, $2.27, $1.22, $1.39, $1.53, $1.65, $2.73, $2.35, $3.38.
And it should be noted that every dollar move in the CL contract, which is the main contract, is $1,000.
$1,000, right? So, once more, in terms of the long-term story, I'm comfortable. And this is one of those cases where, unlike some other things, I don't have strong conviction. But I know if I get a signal on PatternCast, I'm taking it.
Well, see, that's the thing. When we're talking about the complexity of the market, and particularly oil and all its derivatives and the cracking process and all the different markets that it touches, like what I said from the very beginning of this talk, it touches virtually every aspect of our life. And how do you assess that and try to bring it down to one product and then try to guess which way it's going to go? So far, the political angle seems to have been the strongest angle, but that could change in a whim.
Yeah, you don't, and that's why PatternCast was developed. Because
Yay, PatternCast!